South African banks have added 180 billion in value in the last 2 months. What? What? 180 billion in value in the last 2 months for South African banks. South African banks are making a killing, right? Here are the details, and this is being reported by Business Day. Since the 30th of May, when the election results were confirmed, the JSE Banking Index has added 18.88% in value, which translates to the number that I mentioned, 180 billion. That's a lot of money, right? And leading the gains, Capitec was up by 26%. FirstRand was up by 21%. Standard Bank up by 20%. Nedbank up by 10%. And Absa up by 80%. Capitec's gain over the period represents an increase in its market cap of 56 billion rand. FirstRand's market cap is up by 60 billion rand, right? And FirstRand is the biggest of the five by market cap with a valuation of 440 billion rand. These banks are making bank. Banks are banking on the banks. That's a lot of money. Banks have actually done very well. Standard Bank added 48 billion value in the period, and Nedbank added 6.7 billion, Absa added 9.7 billion. Now, the reasons that are being reported for this particular growth in market cap, hey, wait now, why is it growing like this? What is the publication saying? Number one, guess, take a guess. What do you think the first reason why the banks have performed so well is? Guess. I'm going to give you 3 seconds to guess. One guess. Have you got it? Get your second guess. Get your third guess in. Right. Here are the reasons as reported. The coalition of the ANC and DA. If you guess coalition, collect 5 rands from your own wallet. Coalition. That's the reason. The multi-party coalition was the preferred option of the markets. If you recall, when the coalition conversation started in earnest, we started to see News 24, Business Day, and a few others saying that the markets want a particular coalition. They want the ANC and the DA to come together. That's what they wanted, and they got it. So apparently that's been quite a good thing for the banks. Number 2, improved energy supply. So apparently the fact that we haven't had all of this load shedding is something that has definitely benefited the banks. Number 3, the reappointment of Enoch Godongwana as finance minister was well received by the markets as it signaled that the National Treasury will stick to its fiscal consolidation path. We're going to talk a little bit about this fiscal consolidation. You know, when you listen to economists speak, they'll say something like, well, we are on a fiscal consolidation path. And if you don't know what that means, you just clap. You won't, it just sounds like it's just like the right thing, right? Fiscal consolidation path. What a beautiful phrase. We are on a fiscal consolidation path. But what is it? What does it mean for you and I? Anyway, there are also international factors. International factors are that the US Federal Reserve is expected to institute its first cut in September of this year. And this follows massive rate hikes, which basically have been happening for 2-3 years because of the inflation that followed a lot of pumping of money into the American financial system as a result of the pandemic. If you recall, the American government decided to give its citizens all manner of bailouts during the pandemic, and that really caused inflationary pressure. And since then, they've been raising the interest rates in America for a very long time, trying to bring inflation down. It's coming down, and there's optimism that as a result of that, that's going to trickle down globally, right? The RMB Morgan Stanley said in its research note as another reason that the stage was set for improvements in South Africa with lesser load shedding, and that banks, insurers, and industrialists were the preferred sectors for people who are buying shares, etc., to put their money. Banks, insurers, industrials. That's where you put your money, right? If you have some money to put it in. So RMB Morgan Stanley said SA stocks could yield 18% returns in the next year. So money is being made. Money is being made by companies like, the insurance companies, the banks, industrials. Right. Now let's talk about this thing, fiscal consolidation. It's not a whiskey, fiscal consolidation. It's not a whiskey. It's actually something that can be quite tough to drink if you are an ordinary civilian, somebody who doesn't have money to be spending on, the JSE and really profiting from those coalition deals that have been made. Fiscal consolidation refers to policies aimed at reducing government expenditure, deficits, and debt accumulation. These measures are often implemented to ensure the long-term sustainability of a country's public finances. Fiscal consolidation typically involves either reducing government spending, increasing tax revenues, or a combination of both. Key elements and strategies of fiscal consolidation include the following. Number one, spending cuts, which entails reducing expenditure on public services, social welfare programs, defense, and other government activities. Tax increases, raising taxes on income, consumption, such as value-added tax or property, to boost government revenues. 3, structural reforms, implementing changes in government policies and institutions to provide efficiency and productivity, such as pension reforms, healthcare reforms, and labor market reforms. That also includes reforms such as the big P, the privatization. Big P energy. You get big P energy when there's fiscal consolidation. Debt management. Strategies to manage and reduce existing public debt, which might include refinancing existing debt, extending debt maturities, or restructuring debt obligations. Fiscal consolidation is typically driven by the need to prevent a debt crisis by reducing the risk of default. It's driven by a need to improve investor confidence and to maintain access to international financial markets and ensure that government borrowing does not crowd out private investment. Fiscal consolidation can have significant social and economic impacts, particularly in the short term, such as reduced public services. Where have we started to see budget cuts in South Africa? Higher education, basic education. These are things that you need to think about. I'm going to talk about them a little bit later, but when they are talking about fiscal consolidation and being happy that Enoch Godongwana is back, that's something that you should think about. By the way, as a side note, one of the most interesting things about the political discourse, particularly from the media and even from business, is that they'll say something like, we don't want VBS accused because they are corrupt. We don't want them handling the money. We don't want Floyd Shivambu handling the money. The EFF is accused in the VBS scandal of having received forms of bribes amounting to 16 million rands. It's very serious, very serious. Do you know that there was a scandal that implicated Enoch Godongwana and his wife, where they were accused of stealing over 100 million, over 5 times more than what was accused to have been received by EFF and VBS. And he's the Minister of Finance. And guess what? The banks are very happy that he's the Minister of Finance. It's one of the reasons why they're happy. Now, are they happy because of his record, his ethical record, or are they happy because he is doing what they want and protecting their interests? Because if you say that you don't want, for instance, Floyd Shivambu to be the Minister of Finance because he is accused of corruption, how can you then ignore the corruption allegations against Enoch Godongwana if that is your genuine reason? Don't get me wrong. I'm not saying that corruption is right. I'm not saying that I support anybody receiving money from VBS. I'm merely pointing out the hypocrisy and double standard if you say you are concerned about corruption and then ignore corruption allegations because both of them were not charged, right? And Enoch Gondongana actually stepped down from his position, I think in 2012 or 2011, thereabout, because of the corruption allegations. Then obviously he came back when Cyril Ramaphosa reappointed him as Minister of Finance. But it's not like the story went away. You can Google it. It's on Mail and Guardian. Go and check it. You'll see it for yourself. Anyway, that's just a side note, right? Around this discourse. Now, I wanted to talk about the Rand before we go to my closing remarks. How is the Rand doing? We know the banks are doing great, right? Remember, we were told that the markets want a coalition between the ANC and the DA. This is the best coalition. Obviously, they're doing well, but the other side of the equation, which were promised by all of these chief investment officers of various private equity firms, etc., was that what's going to happen is that the Rand is going to go to 17.5 to the dollar. $1 is to 17.5. The Rand has not actually seen those sweet returns that were promised, right? Right now, today, as I'm recording this, the Rand is sitting on 18.3. It started off the year at $1 is to 18.8. In March, it was at about 18.2. 1 is to 18.2. And now it's at 18.3. Basically, it has been trading where it has been most of the year, in that 18 range. So the Rand bounce, which was promised, has actually not materialized. It hasn't materialized. Now, here are my comments on this whole story and my thoughts on this whole story. Austerity measures will lead to a lack of investment in areas needed for long-term productivity. What do I mean by this? To grow the economy long-term, you need to improve the skills of your workforce. That means improving access to and quality of basic education, higher education. You need to have more graduates with skills in professional qualifications such as engineering, qualifications such as medicine, qualifications such as science. These people then can become entrepreneurs, build startups, build new companies, compete with the world. If you have a situation where you are cutting budgets in education, higher education, and other places, then you're not going to necessarily see the growth that you need. Number two, banks are doing well because, and one of the reasons that I think is not mentioned here is because we're entering into a period of big privatization. The state-owned enterprise portfolio was moved into the presidency for a reason. And if you recall, Pravin Gordhan was very adamant that he wanted to privatize many things, sell off many state-owned enterprises. I think there's an understanding in the markets. The markets, they know what's going down. That's why the money is going into the hey. The markets understand that there's about to be a period of big privatization, big privatization. So once you start having big privatization, there's a lot of money that is going to be made, as oligarchs who own large parts of the economy will then be able to buy more infrastructure, more public goods, and lock in long-term profits. As things stand right now, fiber internet is owned by a few oligarchs. The whole fiber internet infrastructure in South Africa is owned by Rupert and a few other people through Vumatel and all of that. So they own that, dark fiber, whatever. They own all of that infrastructure, and they're about to own more infrastructure. There's discussion about the privatization of water. That leads to increased costs of delivery. And because public goods of this nature have high barriers of entry, you don't get real competition. You get a few oligarchs, a lot of them who made their money during apartheid, being able to buy a lot of infrastructure and then own that infrastructure and then continue to dominate the JSE. And then while it employs some people within the middle class, most people remain the underclass, unable to access quality resources, unable to pay for those benefits which exist. And this means that, in my third point, the cost of living is not necessarily going to go down. It's going to continue going up. And we've seen this already. The winners of the coalition are beginning to show up. You can tell who won the negotiations based on who is making money in the outcome of a negotiation. And right now, as you can see, the big banks are making big bank. They're making big bank. Big banks make big bank because of the coalition, a coalition that they use the media to advocate for. And by the way, we need media which is independent. We need media which is better, which is fairer. And if you haven't subscribed to the channel, one of the ways to do that is to subscribe to channels such as this one, so that we can have platforms to conversate and talk real talk without having to bow to the agenda of particular institutions, entities, and oligarchs in South Africa. So if you haven't subscribed, please subscribe. Data from YouTube is indicating that 75% of people watching this video haven't subscribed. It's free to subscribe. It's not like Eskom electricity, which just goes up and up and up. It's free and you can do it, and we're going to be all good. We're going to be all right. So like the video, subscribe. Let's have a conversation as well in the comments. What do you think about all of this? I want to pose two thoughts to you as we land the plane. Number one, banks are making a lot of money. Big money, big market cap. Did you see how much the money went up for Capitec, for FirstRand, and all of these things? FirstRand also, I think it includes FNB. So think about that, right? Big money is being made. The donors who contributed to some of these political parties include the founder of Capitec, Michel Leroux, who donated to the DA over 30 million rands through his, what is it called, fine boss entities and vehicles. That information, of course, is available as the IEC let us know all of the people who donated to different political parties above a certain amount. The value of Capitec went up by 50 billion. What's the exact number? Let me go back to my notes here. The value of Capitec went up by 56 billion. So for 30 million rands, the value of your bank can go up by that amount of money. Wow. Wow. He just increased the value of the bank by contributing to particular parties and helping them get to a particular point. Then we saw the market then influence what coalition. Is this not something which is ethically dubious? Is this not too much power that politicians, or not politicians, that rich business people can increase the market cap and value of their companies for pennies? Because for him, 56 billion is a lot of money. But contributing, of course, he doesn't own the whole Capitec, et cetera, et cetera. He's just one of the shareholders, but he has a significant share. 56 billion for 30 million to be able to change the value of your bank by 56 billion. Isn't that something that is a little bit unethical that needs to be thought about? Another thought I want to leave you with is that the South African banking sector is one of the best ranked banking sectors in the world. The insurance sector is actually at number 3. The premiums are so expensive. So many people complain, but 3 in the world. You know, the World Economic Forum was ranking all of the countries, and the South African banking system was number 19, the insurance at number 3. But one of the things that was a discrepancy in all of that was the funding of small businesses by these banks. While the banks were ranked number 19 overall out of 141 in the world, and South Africa was ranked 60. So the banks were outperforming the country by 41 points. The financing of small business was at 96 out of 141 countries in the world. That's a big discrepancy. That's a discrepancy of 77 positions. Think about that. You're 19 in the world, but you're 96th in the funding of small businesses. Yo, that's a big, big gap. That's a big gap. That's a big gap. So is there not a question that has to be asked to banks? Why, while they are making all of these profits and all of these increases in their market cap and so strong and so much liquidity that they're sitting on, why they are not supporting small businesses more? Is there not a case for them to do this more? Already we see that there's a discrepancy. Their risk appetite is so high. And part of the reason why their risk appetite is so high is because they are not borrowing to certain individuals, or lending rather to certain individuals. That's a conversation that I think is worth having. It's a conversation that's worth having. How can you be 19th overall, but 96th in funding small businesses? You cannot grow an economy without funding for small businesses. The problem that exists, as I identified, is that the people who own the big banks are also the people who own other companies on the JSE, and they don't want competition from new entrants. And so as a result of that, they don't fund new businesses, new ventures, because they don't want competition. And that's something that is a fundamental issue with the South African economy, is that it's an extractive economy controlled by oligarchs. It's not an inclusive economy. And unless that issue is addressed, people are still going to make massive amounts of money on the JSE, while ordinary people are going hungry, while the cost of living continues to go up, and also while unemployment continues to go up and inequality goes up. That is fundamentally something that is broken. Capitalism, and I identify myself as a capitalist, I believe in business. It requires there to be competition. There's no competition, however, when 4, 5, 10 guys own everything and also own the places where the funding is supposed to come from, and they are competitors on the market and therefore only fund themselves. That's something that is very, very peculiar, and I think wrong, and something that if there was, unfortunately, because the markets got their coalition, if there was real oversight and real parliamentary activity, this is something that will be looked into. But I don't think that a market coalition, a market grand coalition, multi-party coalition will go and look into its own donors to say, are you guys acting ethically? Do you have too much power? But those are just my thoughts. What do you guys think? 180 billion added in value in just 2 months. Oh, this is a delicious coalition for the banks. Just purely delicious. What do you think? Let's have a conversation till the next one.